For the moment, fundamentally, how are things stacked up for Indian markets? Let's discuss that with Girish Pai, independent market analyst. Girish, it's been a one-way street for Indian markets. How would you characterize the big picture? Do you think in the short term, in the medium term, this rally has more legs?
Nikunj, I think the market is probably going to continue trading in a range, probably in a higher range than it has traded in the last 12 months. If you look at the past 12 months, the broad range that the market is traded in on the Nifty is between 5,200 to 6,200. My sense is if you roll over that into the next year and considering, say, 8 to 10% increase in earnings that one is going to see on the index, my sense is it should trade in the 5,500 to 6,500 kind of range. And my sense is until, say, the election, which is going to probably happen in April, May of 2014, it will be probably trading in the upper half of that range that I talked about. So as long as global Qs taper is going to happen in 2014, we're going to see some improvement in macro in FY15. And obviously, there is going to be some momentum building up towards an NDA forming a government in FY14. I think that scenario is probably going to play out. But I don't see it breaking out anytime soon unless we see some very clear signals on the earnings front. I think that is very critical. If you look at a sustainable bull market, I think there are two legs to it. One is liquidity, the other is sustainable strong earnings. On the liquidity front, what we see is a very skewed liquidity in terms of only FIs continuing to pump in money. And it waxes and wanes depending on events that play out in the globe. And on the other hand, you have very tepid earnings growth. I mean, if you look at the index earnings growth over the last 5-6 years, we've grown just about single-digit rate. Whereas you probably need at least a teens kind of growth for a few years to get this market up into a new bull orbit. So I think we're stuck in a range. That's the way I look at it. Yes, there are certain sectors and stocks which are in a bull market, so to speak. But there are other parts of the market which are not doing well at all. That's why the index is not moving anywhere.
Girish, what is your sense on the currency? Because clearly the currency seems to be getting back into focus with some weakness being witnessed. And because of the currency weakness, do you think there is a fair chance that IT and pharma leadership may come back in the near term?
On the currency side, I don't think we're going to probably revisit that situation where we're going to go towards the 70 rupee mark unless something changes very dramatically on the tapering side. Right now, the cues that are coming out of the US seem to indicate that tapering is going to be probably a first or a second quarter 2014 event. And even that, considering Janet Yellen is going to be the Fed chairperson, we might probably see tapering, which is going to be fairly modest, So I don't see so much of a risk there. Obviously, if we do see very strong data coming out of the US, expectations could potentially change. So that on the global side, I think the tapering being postponed to 2014 is going to be a good sign. Obviously, we've taken care some bit on the current account deficit side. Probably it's going to come sub 60 billion. Yes, some of these measures are extraordinary. Probably the import of gold, which has come down very dramatically, may not sustain if things return to normal. But my sense is there have been actions taken by the government, the RBI, and also the external environment from a tapering standpoint seems to indicate that we may not revisit the 70, somewhere close to the 70. We may probably be somewhere in the 60, 63 kind of range for the time being is what I see. I don't think, if that is the kind of scenario we're going to see, IT and pharma outperforming in a very significant way. I think from here on, if the market has to move up higher, I think the lagging sectors, the banking, the oil and gas pack, the industrials, I think they will have to start performing. And that is going to be dependent on what happens or what is the expectation from an election in April, May of 2014. Are we going to get a decisive government? Will that government change the trajectory on a lot of policy measures? Will that lead to lower deficits? So I think these are the things that will probably play on the market's mind. So right now, I don't think from here on, IT and pharma are going to be big leaders. But having said that, I think from a portfolio construction standpoint, I would remain in line with the sector weights in the index. I think one shouldn't be too far away from the index weights, because I think we will probably see a binary event in April, May of 2014. If we do see a federal front government or a third front government coming to power, we may see a sudden sell-off. On the other hand, if you do see an NDA-led, a BJP-led NDA government coming to power, you could see a big up move also. So it's a binary event. Therefore, I would probably keep myself aligned along the index weights. And yes, within the sectors, I would probably try to play certain stocks. I would be overweight certain stocks, underweight certain stocks.
What has worked for this market in September and October is the cyclical end of the market. Banks, engineering stock, capital goods, metals. So for those who are buying stocks like L&T, BHEL, SBI, are they taking a big leap of faith, or there is a trade there and there is enough fundamental logic behind buying cyclicals?
I think you've got to go stock by stock. I think for a stock like Larsen, I would definitely bet on it, considering the very diversified portfolio of businesses, revenue stream that it's got, and the fact that it's been adding to the order book fairly consistently over the last many quarters. And it has delivered even this particular quarter. BHL is a different story altogether. I mean, the poor performance we saw yesterday in the results, while the margin decline is, I've not been able to understand how the margins have declined so dramatically. And the order book has come off, both on a quarter-on-quarter and a year-on-year basis. SBI is also, a standalone story. It's a PSU bank. There's been deterioration in asset quality in the last quarter. This quarter, we've got to watch out whether there's going to be some kind of kitchen sinking now that you have a new CEO who's come on board. So I think that these are individual stocks which are going to play out depending on, how numbers shape up. But yes, you're right that some of the cyclicals, the banks, the industrials have probably outperformed. Largely, I think it has to do with the fact that rupee has rebounded from the 68, 69 levels back up to 61, 62 levels. A lot of the performance of IT and pharma previously was because of the very sharp rupee depreciation. So when that reversed, I think, and also once that reversed, concerns on inflation, concerns on fiscal deficit probably diminished a little bit, and those things help the industrials and the banking sector, the margin, much more than the IT and the pharma. So it's very natural that the most cyclical sectors actually bounced in the last couple of months, following a taper being put off and following the fact that you saw a bounce in the rupee.
Jumping on a stock like ITC, this is still considered as one of the safest large cap stock to own. But for those who bought ITC in last 1 year, they pretty much have made money in line with market returns. Do you think the springtime for FMCG is over?
I would say that for selective consumer stocks, especially those which have valuations, PE multiples of 35 to 40 times, even on FY15 earnings numbers, yes, those stocks, I would probably think that the returns are going to be sub-market. Whereas I don't expect that from ITC. ITC, the valuations are not that expensive even at this stage. I think ITC is in a different, if you look at the competitive dynamics in its core business, it's a monopoly, so to speak. And despite a fairly sharp dip in volumes in this particular quarter, it was able to show pretty decent EBIT growth and earnings growth. So it's a stock that I'm not so worried about. Yes, it's a large cap. It is there in most portfolios. So to that extent, it may just about perform in line with the market. That's the way I see it. But if I were to hold one large consumer stock, it would be ITC.
Girish, is there merit in buying some of these asset owners, Lanco, GVK, GMR? Because if you're buying them now, you're pretty much buying them at the option value. So for a Lanco, you may lose 6 rupees, but if they get the CDR package right, the stock could easily go back to 15 or even 20.
If you're going to buy something like that, you've got to have a very long-term investment horizon. Yes, they've survived over the last 5-6 years through the troubled times. And if they survive for a couple of years more, my sense is that they're going to create a lot of value for themselves and to the equity investors. But the point is, do you have that kind of investment horizon in mind? And Can you sit through more volatility in such kind of stocks? If you can, then I think these could be stocks to get into. But then again, you got to put only a small portion of your portfolio into such stocks, which can, over a period of time, over a long period of time, can potentially deliver significant returns to you.